Hello, everyone, and welcome back to our Talking Points, where we look at specific topics for property investors. Now, for those of you in the know, you'll already understand that property investment has a number of moving parts, and knowing everything might not be possible, but what we're going to do is try and help you understand as much as possible of the process. And if you would like to hear more about Wealth Masters Club and what we do, then stick around to the end of this video, and we'll give you a little free gift later on. But before today's talking points, we're going to be talking again about tax. Now, this is something that we all loathe, but it's an important part of any investment portfolio. And if you know how to plan your affairs correctly, then you could pay as little as zero tax. But once again, we'll talk a little bit more at the end of this video. Let's talk a little bit now about the different types of taxes that we have to pay in South Africa and why we have to do it. So for that, I'm pleased to have Daniélle Barrett with us, who is from Destinate Accounting. So Daniélle, thank you so much for joining us today.
Thank you that I can be here with you virtually.
Fantastic.
Yeah.
Now, Daniélle, people often see tax as only the VAT that gets added to the grocery items or when they're at a restaurant, or the PAYE that you pay at each of every month on your salary. But could you give us an idea of some of the other taxes that South Africans need to pay ongoingly?
Yeah, so pay as you earn is basically your income tax that's divided by the amount of months you've been employed for the year. So in essence, pay as you earn and income tax and provisional tax is in essence the same thing. It's just to ensure that SARS gets the tax and make sure that they get the tax at the end of the year. But other taxes that we as South Africans pay is your fuel levy. We pay capital gains tax when selling properties or other assets. Motor vehicles are excluded from that, but we also pay like donations tax. Each individual gets 100,000 Rand exempt from that, but there's estate duty tax, dividend tax, and many others as well.
Yeah, if I hear correctly, it's far too much tax, but it is what it is. I think South Africa, we pay the most tax out of many of the other countries in the world. But one of them that people pay most begrudgingly, or at least their employers pay, is the pay-as-you-earn tax. Can you just give us a little bit of information about how that is calculated on the employee's salary each month?
Yeah, so pay as you earn is calculated by your annual salary. So they take your monthly salary and multiply it by 12 months or the amount of months you've been employed for. And then it falls into the certain bracket. They calculated the tax on that in your bracket, and then they divide it as well, again, with the amount of months you've been employed for. And then you pay that monthly. Yeah. But that is based on your gross salary. So that's inclusive of commission received, fringe benefits, any other income you receive, that they multiply by 12 and put it into the brackets, yes.
Now, Daniélle, just talking about those brackets, is it true that, let's say you get an increase in your salary, could that push you into a new tax bracket where you actually earn less income from it than what you would have earned before your increase?
Well, obviously, when you get a pay increase, you'll definitely move into a higher bracket, but it does not necessarily have to be less than what you've net paid before. It will only happen if you earn less than 15,000 Rand a month. But if you earn more than 15,000 gross per month, you will not earn less than you net paid before. But that also states that your package should remain the same. So if you earn, let's say, for instance, a travel allowance, that should also remain the same. Then necessarily you won't earn less, no.
And then another tax that we pay all the time that people might not understand what it is UIF. So often we see it on our pay slips, but when can someone actually benefit from claiming this sort of tax back?
So UIF is Unemployment Insurance Fund. You can claim UIF when you are a work seeker. So in essence, you are unemployed due to maternity leave or illness or parental leave. So when you are physically unemployed and a work seeker, you will need to register for claiming UIF at the labor services at the government, yes.
And then let's just talk a little bit about the additional things we might see on our pay slips. And one of them is often a skills development levy. So what is that and why do we have to pay it?
So Skills Development Levy is a tax that has been implemented to encourage the development and learning of employees in South Africa. So only an employer with a salary expense of 500,000 and more per year need to register for Skills Development Levy. This is paid on behalf of the employee by the employer, so they automatically deduct it from your gross salary, and that is 1% of your gross salary per month.
And then just a little bit more on the VAT. So who could actually register to be a VAT vendor? And are there any benefits to them actually registering to be a VAT vendor?
Okay, so an individual, a company, any trust fund can voluntarily register, or they are obliged. When you're required to register for VAT, you need to earn more than 1 million rand of services income per annum, or per 12 months, consecutive 12 months. But if you do not meet the above mentioned requirement, you can voluntarily register for VAT. In essence, with benefits regarding to VAT, obviously it can improve your business image. If clients see that you're VAT registered, they know there's a certain cap you need to earn to be registered for VAT. So it can definitely improve your business image for marketing aspects, etc. But it depends on which situation you find yourself. Let's say, for instance, I'm a liquor seller, small business owner that sells liquor, and I would rather like to buy in bulk at Distel rather than Makro. Distel will require for me to be a VAT vendor, then I need to register. But in essence, you're going to pay as well on the sales you've made to start. But with regards to, for another example, I am a lawyer's firm, I'm a small lawyer's firm, and I'm not registered for VAT, and my competitor next to me is a big lawyer's firm, and they are registered for VAT. I can provide the market with a price less than 15% as my competitor with the same level of service. So there's a benefit to that as well. So it depends on which situation you find yourself in. Yeah.
Okay, so we spoke a little bit about UIF. So could you give us more information about Workmans Compensation, what it is, and then who can benefit from that?
Workman's Compensation is a type of insurance that's been implemented, and this insurance, it aims to provide compensation to an employee or their dependents in the case of an unfortunate event that leads to disablement or death or illness, very, very bad illness. But this event had to happen in the course of employment. So the employee had to be employed permanently at the employer, and the employee had to be absent from work for more than 3 consecutive days. Individuals such as the employee can claim, but as well, if the employee died, the widow or widower, children under the age of 18 and other dependents can claim on behalf of the employee. There's also funeral coverage up to, I think, 6,000 Rand that is covered in the case of death. Yeah.
And then my last question, I think it's going to be a bit of a controversial one, but are there ways to avoid paying all of these taxes legally?
I'm not sure what you mean with avoidance tax evasion, no, but you can plan around it. With regards to when you want to pay as you earn or your income tax, you can calculate when you want to. Let's say, for instance, if you don't want to pay as you earn on a monthly basis and you earn from a retirement annuity fund, you can pay it at the end of the year in the financial year for your income tax, or you can pay it by provisional tax. But tax, you need to pay. There's no, with relating to income tax and your employee, you need to pay your tax if you're more than the bracket of tax. There's no way around it legally to avoid it, but tax planning is definitely out there. Yes.
Fantastic. Daniélle, thank you so much for your time today. I'm sure we learned a lot of great tips. But if you at home would like to find out more about how you can pay less tax through investing in property with the correct structures, of course, then join us this weekend for a free webinar where we'll show you how you can use other people's time, skills, and money to start your own property investment portfolio. The link is in the description, so make sure you register for that. And I can guarantee you it's going to be the best time you will be spending this weekend. And that's it for this week. We look forward to seeing you all again next week with our talking points. So Daniélle, thank you so much once again, and we will chat to you soon.